Welcome everyone. Today, we're going to talk about something that has the potential to change your life: day trading. My name is Thomas L. Busby, and I'm here to guide you through this exciting world of trading. But before we dive in, let me ask you a question. Have you ever dreamed of being your own boss? Of having the freedom to work from anywhere in the world? Well, day trading can make that dream a reality. And I'm not just saying that. I've been a successful day trader for over 30 years, and I've helped countless others achieve financial independence through trading. Day trading is a type of trading where traders buy and sell securities within the same trading day, with the goal of making a profit from short-term price movements. Unlike long-term investors who hold onto their investments for months or years, day traders make trades based on market fluctuations that occur over minutes or hours. Day trading requires a great deal of discipline, focus, and knowledge of the markets. It can be a high-risk, high-reward activity that is not suitable for everyone. Discipline is one of the most important qualities a day trader can possess. It allows traders to stick to their trading plan, avoid impulsive decisions, and manage risk effectively. Without discipline, even the best trading strategy can fall apart. One example of the benefits of discipline in day trading is the use of stop-loss orders. A stop-loss order is an order placed with a broker to sell a security when it reaches a certain price. This helps traders limit their losses and avoid emotional decision-making when a trade goes against them. By using stop-loss orders and sticking to them, traders can protect their capital and stay focused on their long-term goals. Risk management is a critical aspect of day trading. One popular strategy is to use stop-loss orders, which automatically sell a stock if it falls below a certain price. This helps limit potential losses and protect capital. Another strategy is diversification, which involves spreading out investments across different stocks or sectors to reduce overall risk. In addition, some traders use position sizing to manage risk. This involves determining the appropriate amount of capital to allocate to each trade based on factors such as account size and risk tolerance. By limiting the amount of capital at risk per trade, traders can help protect their overall portfolio. One popular technical analysis technique is trend analysis, which involves analyzing charts and identifying trends and price movements. Traders can then use this information to make informed trading decisions based on the direction of the trend. Another useful technique is chart patterns, which involve identifying recurring patterns in price movements. These patterns can provide valuable insights into future price movements and help traders make profitable trades. In conclusion, we've covered the basics of day trading, the importance of discipline, risk management strategies, and technical analysis techniques. These are all essential components of successful day trading, but they're just the beginning. To truly succeed as a day trader, you need to be committed to continuous learning and improvement. Day trading is a dynamic and ever-changing field, and the best traders are those who are constantly seeking out new information, testing new strategies, and refining their skills. By staying curious, humble, and open-minded, you can position yourself for long-term success in the exciting world of day trading. Thanks for watching. Like and subscribe, and we will catch you on the next one.